go ahead and bring up the euro chart. They tested another 30 points lower than that, but did what they do on announcements like this typically. We saw the break. We saw them challenge the lows a couple of times between 6 and 7 o'clock last night, and then they put it all back in.
Yeah, wow.
So the question is, why would this even affect euro? And it's the idea of a little bit of risk off. So where we saw it a little stickier, and we'll look at Canada and Mex in a bit, but this was a case where, remember, we've gone from 111 down to 103.5. A little bit of shakeout of, are these the lows? You can see why it would break in a little bit of thin market conditions. But this is the case where they put everything back in and then some, and we're actually railing right into the highs right now as we go into the U.S. session. So it's actually challenging if you were short and you were looking for that. I mean, I read 3 stories over the weekend. Next stop for the euro is par. And whenever you read everybody talking about, oh, yeah, we're going to move 14% in 2 months.
Sure.
Do we get there? I don't know.
Good.
Maybe we do at some point. Are we going to get there in a straight line? Absolutely not. And this is going to, I think we're going in, and we talked a little bit about this. We tried it higher Sunday night, gave back most of that. Interesting, we traded down to 104.5, which was right where we went out last Friday.
Right.
So I took all of what we put in Sunday night, Monday morning out, but couldn't kind of get through that spot. And now we're seeing the buyers reemerge a little bit. But we're seeing a little bit of dichotomy between what's performing and what's not. And let's take a look at where we're seeing the impact a little bit stronger.
Yeah, and is there any additional color around why it was released at that time? Was the intent not to shake up equity markets, or?
I think, honestly, if I was to guess, it's just a guess, it was that they did this post-equity close. Yeah. Not really, not focused on, what is this going to do to the FX in the thinnest part of the market, which is usually that 2-hour window of 4 to Chicago time, 4 to 6 o'clock in the evening is the thinnest part of the time. That was the time, a week after Brexit, we saw the pound go from 112 to 105. This is times we've seen the euro print below par. It's thinner. It can kind of feed on itself a little bit. Aussie, the same thing. So 10% tariffs on China, that affects Aussie. We know there's a high correlation between the Chinese markets and Australia. But in this case, very much like the euro, they put it all back in. But albeit from much, why did it all come back in? We're not breaking Aussie from 68 cents.
No.
We're breaking Aussie from 65 cents. We're breaking euros from 105, not from 109.
Exactly.
So that is a little bit of context around where it is. The one where it kind of stuck was Canada.
Yeah, great point. 25%. I didn't expect that. I hadn't done too much reading on the tariffs in detail, but I didn't expect the same, just blanket across borders, 25% Mexico, 25% Canada. Does that have a large effect? Obviously, it should.
I think here's one where we had a big move from sub 140 to 141.5. 150 pip move is a big move in Canada. I would imagine that would probably sit well beyond 1 standard deviation, about halfway to 2 standard deviations.
Yeah.
So a big outsized move. And the fact is it off those really thin condition highs at 4 or 5 o'clock? It is, but not by much.
Right.
So I agree with you. This wasn't part of the, at least when I saw the news cycle or what they were talking about. A lot of the focus, we looked at pre-election, the peso being a proxy for an election trade. So here we're getting a little bit different result where you look across the board, sterling up, euro up, yen lower as we'd expect. Canada is the one outlier here, kind of, where it hasn't basically taken out all the reflexive knee jerk, even though we were at higher levels there. So, good one to look at too, is we can take a look at Aussie Canada if you want, or just go right to Max.
Yeah, and it is interesting because you can believe it in a lot of these secondary markets to the news, like the euro, even Australia, where you're seeing kind of you need the initial reaction to the news,
right.
But then there is also the storyline of is this tariffs historically can be a very strong negotiation tactic And so similar to, how the Fed at least is taking a lot of this stuff where they taking the stance of, yes, we hear all the news, but we're going to wait till anything's actually done to react. And so maybe some of that two-way action just coming from we kind of should expect these threats, whether they actually play out on day one, we'll see. But in these markets, you have to at least respect what could happen. So a leg higher.
And I couldn't agree with you more. This is, number one, this is him doing exactly what he said he would.
Right.
Which, whatever your thoughts
Surprise.
are, you're not getting any surprises here. And is it going to be a more tactical play, or is he just going to basically paper the tape and stick it all up there and then see what they can maybe negotiate? I don't know, but you're right. And I think that's why we saw a little bit of the pullback, not so much. I would imagine this is going to continue to be a little bit of a tailwind in Canada. And let's take a look. We're at levels, and actually tighten it up a little bit, Glenn, because let's take a look at, we're looking at dollar max here.
Yeah.
Okay, these are levels we haven't seen for quite some time.
Exactly.
So,
all the way back to, 2022.
right.
In this dollar Mexican pair. And this 20 handle right there. A lot on the election news, but now taking a leg higher this past week and a half.
Absolutely. And does this then impact part of the play too? Is Mexico is a carry trade. They pay higher interest rates than the U.S. That has been something that's helped support the peso up to a point. Now are they going to be in the situation where they're going to have to lower rates to stimulate growth because the tariffs are going to impact it? A lot of things in play. So we're seeing definitely good two-way back and forth in this pair. We're at levels we haven't seen. We're not through those multi-year levels, but expect a little bit more elasticity here. And this will be news sensitive. So if you're looking for a different type of trade, this is a little bit more, it's not more advanced because it's the same. Any currency pair, you're just trading one relative currency against the other. It could be against the dollar, or if you're looking for that next level of diversification, it could be euro against yen or Aussie against Canada. We'll take a look at that too, because that's a very commonly traded pair. But this one will have a little bit more elasticity to it, and a little bit more back and forth. So if you're looking at this from a contrarian, or, they're really going to put, it's going to be impactful, and we're going to see MEX continue to deteriorate in value. If we print through 21 or 22, we're going to get into that uncharted territory level, and you're going to see markets feed on themselves. This is not unlike equity markets, that when they get to new levels, they get more elastic. It's what is fair value is the markets price it efficiently, but there's more uncertainty around where it is. More people need to hedge, so you get greater volatility. So this is an interesting one. You can look at it from either side. Like, this is way overdone. They built in all the news. Now he made the statement.
Right.
What more can they do?
I think you nailed it. And there are a ton of differing perspectives here, because it is easy to say, okay, we knew he would impose something day one. This news is played out. This could be the end of the move. But then you zoom out and you think, well, his presidency is 4 years,
right?
Historically. And could he ramp that up throughout the 4 years? Then your time horizon for this is vastly different.
Right.
And you could see a completely new trading range. And to your point on this being a harder pair to trade, it might just be you need a little more focus into researching all the levers and moving parts, because just speculating here, but earlier in the summer, we had a ton of Mexican peso news around their new government.
Right.
And so you bring it up that it will be very interesting to see if they react in terms of their own monetary policy or additional repercussions to trade. So a lot of things to consider, and a very interesting one to do a deep dive in.
Yeah,
if you are trading.
absolutely. And don't get put off, though, by, well, this sounds too complicated for me. The markets are liquid, and they trade around the clock, and you're getting two-way action. Again, you can see the news play out in real time. This chess match is playing out in front of our eyes. You may have an opinion on the chess match. And that is where this becomes an interesting proxy to do. Be mindful, the bid offer's a little bit wider in here than what we look at in euro. So there's a little bit more friction in doing this trade. And next week, we'll actually walk through a couple of examples of how the trade ticket looks on tastyfx. So you get a sense of, okay, how does this set up in terms of margin, depending on the pairs, is a little bit different. Margin for peso is a little bit higher than euro, where it's 2% margin or 50-to-1 leverage. I believe it's 10-to-1 in the peso. So why is it higher? Well, it's a little bit more volatile pair. And just like in futures, you look at, well, I get 20-to-1 in crude oil. Why do I only get 7-to-1 in natural gas? Well, natural gas has more volatility, and the model, the span model they use, which is a similar model, it says that there is more volatility, thus they require a larger initial margin to it. Same thing here. So you're mindful of that trading this pair. Again, the great thing about SpotFX is you can trade whatever size you want. So this may be one where you trade a smaller unit here because you have an opinion, it's moving, but you don't want to get too caught up into it. So scalability is a great piece of SpotFX. One of the things I like about it is that you're not compelled to use the same institutionally sized products for everything. So that's great. Replicatable in the ETF world? Absolutely not. Replicatable in the futures world? Yes and no. It's a bigger bite, and it can have its own challenges. So this is an area where stuff like Mexico is really interesting. But let's jump over. Where do you want to take a look at?
One interesting one to watch throughout
Kiwi,
the day.
absolutely.
Yep. New Zealand dollar getting a little bit of those effects. I think if we go to the 15-minute chart
But go back to the daily just for a second. And let's tighten it up. So to look at, are we cheap?
Yes.
Absolutely. For the technicians out there, this is a triple bottom. And again, if technical analysis works for you, that's great. If you use it as a reason to stay in bad trades longer, that's the problem. It's not. It should be a tool, not your decision maker. But it's great context, especially for new traders who, I watch guys like Tom who could trade 100 underlyings, and he just does it with a ribbon of prices. And I've been trading for 42 years. I talked to my old friends, and it's like nobody can do that.
Right.
He is unbelievable. He's exceptional in his ability to keep all that information warehouse. Charts are great visual to give you context around where things have been. Things are here. Again, we're at a very interesting inflection point. This has been a bottom for a lot of the moves here. Have we kind of pierced the closer two bottoms? Yeah, but again, not by a convincing way. We're just sitting around that level. What does this mean? This will be an interesting time for either we extend and roll over towards the end of this week. And this is an interesting week because Thursday's a holiday, although FX is open.
Right.
So you can trade FX around the clock. There's no like half day or anything like that. Friday, we're open all day. It's not like a half day like it is in equities. So you can get a product, which is something as an active trader I love and a lot of people do. It'll be interesting to see if we stage a bounce off these lows or this is just the capitulation. Then we've got U.S. employment and non-employment. We've got GDP and inflation numbers tomorrow. We got
New Zealand Reserve Bank of New Zealand meeting tonight.
And what time is that?
It'll be at 8 p.m. Eastern with the press conference at 9 p.m. Eastern.
Okay, and where do you find that, Glenn?
You can find it right here in the economic calendar on today. And we've got it right down there. And yeah, this will be interesting because we have forecasted a 50 basis point cut. And this is a continuation on.
I love this calendar. We just rolled this out about 6 months ago, and I mean, we had we had a bad calendar. Why would I put lipstick on a pig? It was. This is really. I mean, going through this was something. Again, from this, I'm not going to make a macro determination. What I'm going to do is, I know the event risk. I know what the expectations were. I know what has happened in the past.
Exactly.
That's the information I need as a trader to act. I'm not going to build a whole macro theory off of this. As traders, we want to know when information is coming out that can move markets. So, great context here. They're on a fairly aggressive but similar easing cycle to us. Now, they're debating, actually, as that news came out about the tariffs, one of the Fed governors, Kashkari, came out same time and said, the neutral rate may be higher than we think, and December is not a foregone conclusion for a rate cut. So you saw bonds trade a little bit lower, notes trade a little bit lower. So U.S. interest rates pushed a little bit on that. But this is, so in the U.S., rates not guaranteed to be cut in December. Here, they're looking for a big 50 basis point cut. It's a large cut off the rate.
Definitely.
So this will be an interesting spot. So you've got two things to keep track of. Rate cut at 7 o'clock my time in Chicago, 8 o'clock Eastern time. Then the press conference, just like they do in the U.S. here, from the Reserve Bank of New Zealand's governor at 8 o'clock Chicago, 9 o'clock. We should see movement off of both those. One will be whether or not they do cut the full 50 basis points, because it's not a lock whether or not they will. And do they cut by less? And do they come out and then tweak it with verbiage? Or do they cut by more and then tweak the verbiage back? I don't know. All I know is that we'll get movement off of it both sides, which will be interesting. So from a scalper standpoint here, I would say you're taking your ranges that you're interested in. You're probably adding between 50 and 100% to it. In other words, if I'm going to scalp around 40 or 50 points in Kiwi right now, I'm probably going to look for 60 to 75 basis points, pips, of scalping range on these events if I want to be the contrarian or I want to manage positions. Just as context, everybody, you determine what works for you.
Right.
It's really up to everybody to do that. But this continues to be an interesting play. Markets here continue to offer us good two-way action. Very much looks very Australian-esque, very Euro-esque in terms of they hit it hard, they hit it through the lows, and they recovered off of that a little bit. So I don't know if there's enough to make a story here. We've bottomed, especially with rate risk coming. But I think it does mean this is something that's going to be on top of my board when we go through tonight.
I agree. Yeah, a lot to look forward to. And also, if you saw on that economic calendar, we have Australian data tonight as well. So a lot to look for with FOMC minutes today. Not sure how time sensitive that'll be now with all these things evolving so quickly. But a lot to look forward to on the economic calendar, and a lot of good dollar stories playing out this week ahead of the holidays.
Good job out of you today, my friend.
Thank you, sir.
All right, well done. Guys, we'll be back with you next week, actually. Have a great day.
Thanks, guys.